Good morning, everybody. It's Chris from Serene Education with your 4 majors and notes update for the 13th of February 2013. Okay, let's crack on. I'm going to be doing the analysis on the 4 majors this morning, starting with the euro against the US dollar using our CTC counter cash system. Let's have a look and see what's been happening. So, yesterday, what did we have? An up day. That's exactly what we wanted. We wanted to see 133500 now becoming a near-term support, and sure enough, after the prior day's candle, Monday's bullish engulfing candle at support here at 133500, we have now seen price moving higher. So where to? Well, 13500 would be our next target, so we would have to be well aware of that, and you can see quite clearly where price is trading in relation to that area. So there's not too much left in the tank in terms of upside. However, if it continues to maintain that way, then we should look to target the 13500 near term, get above 13500, then we're going to be back into that upside move long term. Okay, so you can quite clearly see now on the 4-hour chart, quite clearly see the last 12 hours in particular, consolidation over the Asian session. I'm going into the Asian session last night, and subsequently what we want to see now, if prices to maintain those highs, is obviously to see the break of the Asian high. So if we look on the hourly chart, let's look to see if we can see a nice break above the hourly consolidation area here. You can quite clearly see the last hour not really making any move, primarily also unstuck at the same area that we saw at 10 o'clock last night GMT. So having to get above 1347 in particular to get any more upside. However, you can see now quite clearly that if we are to trade between this point now, any position above the 1347 towards that 13500, you can see there's a lot of resistance in the shape of the institution, plus that all important underside of that major support and resistance level in the shape of the 13500. So be aware of it. You're going to take any positions here, take them really quickly, because we don't want to be seeing this breakout that we saw just recently on the 7th being the break of the major support, this being the consolidation or the break pullback, the pullback area, and then we're going to see a continuation to the downside. So in this area here, I would call it the no trade zone, because it's just far too much risk for very little profit. Okay, so it's very, very important if you do pull the trigger here to be very, very aggressive on your entries and exits. Onto the sterling against the US dollar, Great Britain against the US dollar. Okay, GDP against the US dollar. There are quite a few varieties, but anyway, crack on. So where has this been, and where is it likely to go to? Well, we spoke about yesterday about price finding resistance under the 15700 near term because of this consolidative range. Price is now trading below that major support and resistance level, roughly around the 158,500 mark, which comprises of the prior swing or support for this pair on the daily. You can quite clearly see it fell to get above 16,300, and then we saw price moving back. And subsequently, since we've broken this area here, this prior support area at 1585, price has now been trading below that, and doing so trading below the institution, so we should be looking for nothing more than selling opportunities. You can quite clearly see lower swing, lower swing, lower swing, all swinging lower, depicting downside momentum, guys. So we should be looking for nothing more than shorting opportunities intraday. We have had a lot of wickiness intraday, a lot of ups and downs and sideways, etc. However, you want to be trading with market trend. Yesterday in particular, we had this very, very long, elongated hammer, if you want to call it, because if you look at where this particular candle is coming, it's coming at a price support, consolidation support, where we had this little morning star formation, not a really great one, but nonetheless, I'm actually just above the 16,600 mark, and to nullify this as a major or potential consolidation with an outlook to bounce here, because of the fact that price actually closed at the upper end of this candle, however very indecisive. We do need to see either one or two things. Because it's still in a negative trend, we want to see a bearish engulfing candle. Here we had an indecision candle. We wanted to see a bearish candle confirm that price is moving lower. We've got a bullish candle, so therefore near term intraday we should be looking for ups, and because we had been to this area here at 1585 before in the past, that would have been a great area to target, and sure enough we saw that a couple of days ago. Then we saw a bearish engulfing candle, which told us this area here at 1585 was still a major resistance level. Notice the institution, the 20 period, the 50, everything's telling us you should be looking for negativity. That very much happened. It pushed price low again, but only to the consolidation low. Okay, it had to close lower. So yesterday's candle had to be very important in terms of breaking lower to confirm that price was still looking negative. And what happened? We had this very indecisive candle yesterday. We had a lot of movement to the downside, followed by a huge move to the close of the US session last night, and we had this indecision candle. So yet again, another indecision candle, apologies, at support, or this consolidation support. So we need to see a confirmation signal, guys. It has to be bearish engulfing because it's still negative. Okay, the only thing that's going to cancel this negative candle here at support is obviously a bullish engulfing candle, and then we retarget back up towards that institution moving average at 1585. Onto the US dollar Swiss franc. Let's have a look at this particular pair. Okay, so 930 happens to be our major support and resistance level high. You can see I've taken the weekly low that we saw back in August of 2011 to the current high that we saw in June, July of last year, 2012, and its projected February retracement areas, and the 23.6 happens to be that 930 mark, which is in dark above me. Okay, and I've plotted on every other time frame going intraday, so that I'm well aware of that 23.6. Because price is trading below that level on the weekly, you can quite clearly see price is spending more time below the 23.6, and you can see making lower swings. That depicts downside momentum. So I should be looking for nothing more than shorting opportunities on my intraday time frame. So as long as price maintains below the 930, then I should be looking for entries to the downside. Now again on my daily, there's the 930 mark, which is my 23.6, and you can see quite clearly price spending more time below this area than above it. And notice very well that the institution moving average is also above price, which is a negative sentiment. Okay, and you can see quite clearly on my histogram, my ribbon, mostly red. One or two areas are blue, but mostly red, which tells me the sentiment is still looking negative on the intraday time frames and near term. So what has price been doing? 910, we've seen a lot of consolidation and run around 910. So I've made a mental note of that, and I've also plotted it as a horizontal line, consolidation line on my chart. Okay, so I want to see price moving or breaking this with momentum. We did have it a couple of days ago, okay, last week in particular. However, not a very decent sentiment candle. Okay, we saw a lot of selling into the support. We saw an indecision candle. This candle over here on the daily needed to be nice bearish engulfing. It failed to materialize because it gave us a hammer type formation, because we are at the bottom of a trend at a major support and resistance level, a consolidation area at 910. So I wanted to see another confirmation, another bearish engulfing at the underside of 910. All we got was indecision, another spinning top, which is an indecision, and more bullish sentiment because it's now closing high in the prior ones at still under 910. So I would have actually had to be patient and waited for the candle, and sure enough it came up and it was against market sentiment, moving higher. So you can quite clearly see now, if you're taking the high over here to the current low that we've had, you can quite clearly see now I can actually look to target the pullback, knowing that the closer it gets to 930, the more likely the price is going to be more consolidative, because we are at the underside of a major support and resistance level. So I have to be well aware of that. And you can see quite clearly on my fib retracement, the 23 was at the price support, the breakout headed towards 38 and stopped and closed above it. And once it found support above the 38 intraday, headed back up towards the 50. But the 50 now has happened to be major support and resistance level for this, because you can see yesterday's candle, very indecisive, trading between 2 points. So there's a 50 pip range in this, but not really making any higher highs, and in doing so forming this bearish engulfing candle. So it's now consolidative above the 38. So intraday, guys, we want to see the 38.2 now becoming or being breached, so we could actually trade back down towards that 910 mark. Okay, because if this is genuinely bearish, yesterday's a genuinely bearish, has it formed by closing lower yesterday than the prior candle? It's now potentially formed a lower swing. Okay, however, the more it spends time above the 38.2, we could see a bounce. Okay, breakout, the pullback, and then the bounce back up towards 50, back up to 61.8, back up towards the all-important 930, which happens to be our near-term resistance level. So, if this is to be a genuine negative candle, we need to see this 38.2 being broken. If it does get broken indeed, target back towards the 910 mark and further to the downside in the direction of the major trend, which is negative. Okay, the only thing that's going to stop us is to get a bullish engulfing candle above 50, and that would mean that we should be targeting intraday back up towards 61.8, back up towards 78.6, and then reattempting that 930, which is our major long-term support and resistance level in the shape of the 23.6 Fib retracement. Last pair of the day is the US dollar Japanese yen, and let's have a look and see what's been happening near term for this, because this is the one, any yen crosses are the ones that have been giving us the best return bang for buck in terms of time invested and what you're getting in return. Because if you look at this particular weekly chart on the US dollar against the Japanese yen, you can see the US dollar has gained a hell of a lot of strength ever since October of last year, and you can see how much it's moved in that time frame. Very, 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 very strong uptrend, and in doing so, really breaking major highs recently and targeting higher highs. I've taken, you can see these two horizontal black lines over here are very much my 23.6 and my 38.2 Fib retracements from the monthly high, all-time high, to the monthly all-time low. Okay, you can see how clearly price on these weeks moving into these areas, consolidating, breaking higher, consolidating, and pushing higher, finding resistance, breaking out, finding support, and moving back up towards the 38, and now consolidating as we head into the 38, which happens to be a round number here at 9,400. Consolidating, so that week, last week, very indecisive as we headed into this area, and now you can see prices making an attempt, or has made an attempt recently, of attempting to get above 9,400, but you can quite clearly see now price spending more time at the lower end of the 50% line of this candle. And if this week continues the way it is, and we start to see price actually tend to hug the bottom end of the candle, this could end up being a shooting star at the end of a major trend, because we have been trending, and we only see shooting stars at the end of a trend, but that needs to be complemented by a resistance level, and sure enough, the 9,400 would be that resistance. So shooting star at resistance confirms that we should be seeing near-term pullbacks, and it could pull back. You can see quite clearly on the daily. It could pull back all the way back to the 23.6 area back here at 87. So it could fall to quite some time. So very, very important. If this is clearly a resistance area above us, then we need to be well aware of it. So I could take the low here in September on the daily and take the current high that we have at 9,400, and you can see quite clearly 23.6 Fib retracement would be the 90.50 mark. The 38.2 would take us roughly around about the 88, which will be the 50-period moving average. 50% will take us just below that major support and resistance level, 23.6 Fib retracement area at the dark line here, weekly, and the monthly, these pullback area here, roughly the 87. So this would constitute our no trade zone here between the 38 and the 50, because we have this horizontal line smack bang in the middle of it. So target 1, target 2, wait for a break below the 86, and then target 3, target 4, etc. to the downside. So looking at the daily, quite clearly the prior day, Monday, closing, making all that effort of actually, see decision was lower, but not lower than the price support area, the consolidation support and resistance. Price reattempted the high and breaking that 9,400. We thought, great, everything's looking fantastic, it's going to continue on its way up. However, yesterday's news relating to speculation that there are issues with the yen and the depreciation of its currency. People got talking about that, and it's now going to be looked at in further detail on the G20 meeting in Moscow later this week. So that's going to be quite interesting to see what happens. And sure enough, that actually pulled price low again. We had a bit of a consolidation. That's pulled price back down below this 9,400. Remember, we have to be trading above 9,400 to see any further extensions for this particular pair. If we don't, then we're going to see consolidation for the near term, and then with a likelihood of a break and a continuation or fall lower. So if we see a consolidation break here below this consolidation area here in the shape of the 92.50, then we should be looking potentially at these areas here at 19.50, 88, etc. to the downside. So please be aware of that. Okay, so as we go into our 4-hour chart, you can quite clearly see the momentum has very much been positive to the upside. We had some red here. Okay, everything was looking negative. However, you'll still be above the institution, above the institution, and trading into this consolidation support and resistance level here around the 88. So rather waited for a nice bearish engulfing candle to take us lower than that, then target the 87, which happened to be in the institution, and then wait for the correction or breakthrough. That failed materialize. So this this particular sell here was a null and void because we're trading into a major support area at that time frame. So looking back here, you can quite clearly see we have seen price moving or pulling back. However, you can still see that the histogram remains blue. Okay, but in order for this to be a genuine upside, we would need to see another bullish engulfing candle like we did recently. You can see a lot of indecision candles, and we were looking for that decision candle to be support above 94. That failed to materialize because we saw a bearish engulfing candle which took us back below the 9400, and sure enough, price failed to really build on that, and we saw a sell-off yesterday. So near term at the moment now, you can quite clearly see still moving lower, very tentatively nonetheless, but moving lower towards that 9250 mark I mentioned earlier, which happens to be our current support area near term. Got to get above 9400. If not, we're looking consolidated with an outlook potentially the longer it goes or finds resistance here at 94 for price to revert to the downside. So keep tabs on this, guys. Be well aware of it. Got to see a nice bearish close primarily on a 4-hour chart below the 9250 to confirm that we should be looking for the foreseeable future as negativity to the downside, and then we'll be taking profit at, I mentioned, 9050, which is our daily next consolidation range area, which is a nice 10-20, it's a very good target area. So be patient when you're waiting for these prices to confirm their sentiment support. So be aware of that on that particular pair. And if yen's doing this on this particular against the US dollar, then we could see the same outlook being on the cross pairs. So Euro yen, Sterling yen, Aussie yen, New Zealand yen, etc. So have a look into those pairs as well while you're at it. Otherwise, that's it for today. I hope you have a fantastic trading day. Please be just look into the news. There's a lot of news out this morning for sterling. We got Governor King speaking. He's handing over the reins later this year. We've got the Bank of England inflation report. That's going to be interesting. We saw inflation 2.7 yesterday. Was the outcome, but just be aware of that. And then we have the US data. A lot of US news later this afternoon. Core retail sell month figures. It'll be interesting to see the core retail month figures because we are in February now. We're going to see what happened in January after Christmas. It'll give us an idea of how things have been progressing if we are seeing contraction going into the new year. You tend to see these retail figures, etc., like at sales figures, drop in Jan, Feb, primarily because of the fact that nobody's spending or counting their pennies. But if these sales figures and these retail sales figures are higher than 0.1, then it'll be good because for the US dollar because people are still out there selling. You quite clearly see the prior month in Jan, we're expecting a contraction, hence the reason why it's only 0.1. FOMC speakers again, crude oil inventories, 10-year bond auctions for the US market could be an interesting one just to look at. The prelim GDP quarter-on-quarter figures also very important. You can see it's gaining strength for the Japanese yen, that is. Could be interesting to see how things pan out for the yen until Friday at least. Going into the new week, it'll be very interesting to see if we can get back up above this 9400 mark. Otherwise, I'm going to leave you with that. Have a fantastic trading day, and I'll see you first thing tomorrow morning. Until then, trade serenely.